This is the last Mortgage 101 of the season. It's kind of sad, isn't it?
I know. It's just, it's coming to an end. It's our last regular show of the season. I think it's been a great year for our show. We've had so many, engaged guests and questions and things like that. It's been really amazing. And November is just such an important month, as you know, Todd, Financial Literacy Month. And that's really what we do here with this show. It's really about educating our listeners, and it really motivates me to come and, share as much information as we can.
All right. And you brought with you a guest, Brenna Charles, who I've been chatting with a bit here. Brenna, hello.
Hello, and thank you for having me. I'm kind of excited to be here on what I'll call the season finale.
Yeah, this is the season finale.
Exactly. The last show. It's almost like this is selling Sunset. We maybe can call this, financing Halifax or whatever. Yeah, and we talk about so many different things.
Maybe like a reality show. Maybe they'll interview us all separately after, and I'll kind of run you down, and then you'll run me down.
Yeah, we'll have
Vanessa will be like, I don't know what's going on with them, and it'll be all like drama. What do you think?
Yeah, exactly. I like it. I'm here for it.
Okay, Brenna, introduce yourself. What do you do?
Sure thing. So I'm actually in today from Toronto. I'm the vice president nationally of FCT, and really owning the strategy of what we do and how we partner in the broker-originated mortgage space.
Okay, great. So Clinton, when it comes to Financial Literacy Month, there's just so many things we could talk about. What kind of percolates to the top of your mind when you want to get that information out? What do you think people should really be thinking about right now?
Well, I think it's just people are not having a great time, Todd. I think we all know that the interest rates are high and hopefully, reducing in the future. I think, the economists are thinking midway through next year we're going to start seeing some rates soften. But people are coming up for renewal, and it's very, very daunting. We've said in the show that people are waiting to the very last minute to really start making some decisions. And I think at renewal is such a great time to look at all of your finances. And sometimes changing lenders makes a lot of sense. And sometimes even looking at a refinance. Like we've had so many people coming in, looking to, extend their amortizations and sometimes, borrow additional funds. Mm-hmm. Luckily that if you bought a home prior than, 3 years ago, at least here in Halifax, it's worth a lot more money today than it was back then. So people are leveraging some equity in their properties. But even just at renewal and doing, a straight renewal, sometimes existing lenders don't treat their customers as good as a new lender would. And that's really why we wanted to bring Brenna on today is, talk a little bit about the mechanics of changing a lender and, what does that look like from a consumer's perspective.
Okay, Brenna, what are some of your kind of 30,000-foot thoughts that you'd like to let people know about?
Well, to Clinton's point, I know FCT and myself, we're tracking with the sheer number of mortgages that are coming up for renewal in this next year. I think I've seen stats like 4.3 million Canadians are going to have their mortgage up for renewal.
That's a lot.
Mm-hmm. And that is a lot. Mm-hmm. And
is that abnormal? Is that just kind of happenstance of that?
It's somewhat abnormal because of the market we saw 3, 4, 5 years ago. Mm-hmm. So in COVID and when funds and rates were super low, a lot of people moved their mortgages or purchased homes. Now those mortgages are coming up for renewal. And to Clinton's point, staying with your existing lender may or may not be in a homeowner's best interest. So that's where, from our business perspective, we're looking at how can we make it easy for clients and for homeowners to move to a lender that meets the needs and from FCT's perspective, how we do that. We have programs that really just seamlessly move that mortgage over. And, as we look to 2024, we're trying to identify some best practices that can, for homeowners to keep in mind as those mortgages come up for renewal. Keeping an eye out from those letters from your existing lender that let you know, your mortgage is coming up for renewal. Mm-hmm. And leveraging that sort of initial contact from your current lender as almost like the prompt to reach out to, your mortgage broker or a professional to sort of understand what are the options and should you be looking to transfer? Should you be leveraging this opportunity for debt consolidation?
Mm-hmm.
We're seeing it every day. And I can tell you, there's certainly a lot of people, and I think there's been a big popularity in home equity lines of credit over the years. Mm-hmm. And there's a lot of mortgage products that might have multiple components. And I think people's situations change so often. And, at renewal, it's a really good time to look at that. I can tell you popularity-wise, and you asked me, what are people doing? What are, transactions that we see every day? Mm-hmm. We're seeing people coming out of some of what we call a collateral charge type product. Not to name any names, but like a home line plan or a flex line or a step. And you would know who your lenders are. Going out of a product like that into a standalone mortgage certainly has been very, very popular. Mm-hmm. The reason being is with this rate environment and where the rates are with the Bank of Canada, if you have a home equity line of credit, you're paying a lot of interest. And the interest rates are much lower in a mortgage. And I think sometimes Canadians really just want to pay down their debt. And we're able to often offer a very aggressive pricing for clients at renewal, especially when they change from lender to lender. And maybe, Brenna, you can talk to that a little bit. Like, how does FCT get involved in this process? Like, how does a client even engage with FCT? Like, how does this even happen?
Yeah, so from FCT's perspective, what we do, and there's a number of different mechanisms on how we can move your mortgage from your existing lender, and, it could be in a home equity line of credit type product, and how we move that into more of that sort of conventional standard mortgage. And we do that through, again, working with your new lender. So again, if you're you'd be working with your broker to provide all those documents that you might need to qualify your mortgage with the new lender. Then FCT, we will coordinate sort of the legal and the back end with land titles to make sure that that mortgage that's registered on your property. So it's not just something that shows up on online banking, but there's actual, legal documents that get registered on title. So it shows the lender's interest in your property. FCT, once we get instructions from your lender, we then essentially discharge that existing interest that's registered on your legal property, and then we're going to register a brand new mortgage with your new lender under those more conventional and hopefully more favorable terms.
Okay, I want to ask you guys about Chrystia Freeland and the and I know you were on radio with Rob Snow talking about this.
Yeah, I was on his national show.
Exactly,
which is
that's
really
right.
That's a great privilege.
Exactly, and I'm sure you'll be on with him many more times. The Canadian Mortgage Charter, a non-binding set of guidance and expectations that Ottawa laid out for banks in relations to mortgages. Is there any heft to this, any substance to this at all, Clinton?
Well, I personally have questions. I don't have the clarity yet. I don't know, Brenna, do you have any insight?
I mean, I'd suggest, like, again, from that 30,000, level view,
right.
I don't know if there's necessarily anything totally net new with teeth.
Yeah,
it might be a lot of
talking about extending amortization periods. You're doing that already, are you not?
Well, it's not prescribed necessarily that lenders need to do this. So what I found interesting, as a professional and dealing with this every day, we certainly have lenders that have a fixed payment with a variable mortgage. And as the interest rates have gone up, their amortization has gotten longer. We certainly have, maybe midterm potentially switched, and we can talk about what a switch is with Brenna a little bit, from lender to lender to reduce that amortization. But what part of the charter is saying that lenders need to be able to accept a lump sum payment, maybe over and above your prepayment privilege without penalty, to bring that amortization back in line. And these banks are in business to make money for the shareholders. Right. We get that. Yeah. And I think that's what's so interesting about our business is we are biased to our clients, not necessarily biased to the lender. And that's why partnering with, a company like First Canadian Title is so important. You can get your mortgage registered as a refinance, with a lawyer, or you can go to a company like First Canadian Title. The nice thing with First Canadian Title is, it's a national firm, and they're also partnering directly with the lender to make sure that the client's best interest is really at heart.
Okay, ending the stress test when switching lenders at a time of renewal. What are your thoughts on that, Brenna?
I mean, I think, certainly it helps. So the purpose of the stress test, if maybe we go back a little bit, is to make sure that clients who are, taking out new funds would be able to qualify at the time of maturity if, looking at today as an example, they mature their mortgage and they have to renew in a higher rate environment like today. So, I think it's already done its job as we've, anticipated
I think we're at the peak.
Exactly. We're at the peak. So I think removing that stress test and maybe expanding, so right now, to my understanding, on insured switches, and so again, if there was a default insurance premium paid by the borrower, and again, I know I'm getting into a little technical.
But like CMHC, Sage, and Canada Guarantee, we talk about those guys on the show, like if they have a high ratio insured mortgage.
So now at renewal, there's been clarification that's like, okay, if you're switching over to a new lender, again, more favorable terms, they no longer have to qualify at that higher amount, which should make it easier. So it's a net benefit to homeowners, and it makes absolute sense. And to be honest, I think that should be expanded beyond just those sort of those CMHC insured mortgages.
So the stress test makes a lot of sense when rates are 2%.
Rock bottom.
Right, rock bottom.
But when we're at 6 and 7%,
you're just pushing we're already at the peak, right?
We're almost forcing some customers into alternative lending solutions because this is a prime customer with great credit, but we just can't qualify because of the ratios.
Yeah.
And I think what Brenna said, we see a lot of transfers, and part of our advice that we give customers sometimes is not to refinance, and sometimes it's just to switch lenders to be able to get better terms, better rates, especially in this rate environment. Sometimes we're seeing a variance of 50 basis points up to 100 basis points of what a customer is offered at renewal compared to what we can get a client approved for with a transfer. And the nice thing with switching, the lender is usually paying the cost. So there's no cost to the customer that's incurred to change lenders. You're getting the benefit of coming as a new customer. And I know I throw out this adage that the banks are kind of like the cell phone companies. They always have promos and better deals for the new customers than maybe existing. And I think that's a real reason kind of at renewal while you need to seek the advice of an unbiased mortgage professional. Okay,
we're going to take a break. Mortgage 101, your guide to home ownership. Clinton Wilkins in studio here with Brenna Charles.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.